Jim Wyckoff joins us this Thursday. He's up next. Jim, thanks so much for being with us.
Hello, Daniela. Nice to meet you.
Jim, we'll talk ECB and Japan's stimulus package in a bit, but before that, we saw gold hit a 5-month low earlier this week. Obviously, the metal's struggling to get out of pressure here. Does anything in the market, however, suggest to you, Jim, that there could be potential upside here?
Daniela, I think from a bit of a longer-term perspective, there is a scenario that could play out very possibly. I've mentioned in my reports before that investing and trading is ultimately a money game, and the flow of money is paramount. What we've seen the past many months is money flowing into the stock market. The stock market, the U.S. stock indexes and other world indexes too have hit multi-year or record highs. History shows that these bull runs can't go on forever. And when that flow of money, which up to now has been a negative for other asset classes because many investors and traders think the stock market's the only game in town, when that money flow does reverse, and it will, history shows that, we will see other asset classes besides the stock market start to benefit, including the raw commodity sector and gold. From another perspective, the trading or the investing pendulum tends to swing from hard assets to paper assets. The pendulum right now is well into the paper asset camp, which is the stock market. It seems to me it's getting ready to swing back toward favor for the hard assets, including raw commodities and gold. So it is my bias that these very mature bull markets in the stock indexes are at or close to being near a top. And once that top is in and the stock market starts to trend lower, which it will, you're going to see, I believe, flows into other assets, including the precious metals. One other early clue this week, Daniela, is that the crude oil market has seen a bullish upside technical breakout on the daily chart. I've said for some time now that for the raw commodity sector to begin to see any bullish enthusiasm at all, the downtrend in the crude oil market needs to be broken first, because crude oil is arguably the leader of the raw commodity sector. And indeed, that has happened this week. So that's another early indication that we may see some successes in the raw commodity sector, including the precious metals, here in the coming weeks or few months.
Jim, obviously gold's struggling to find a place amidst the more upbeat economic data we're seeing come out of the U.S. Do you expect any surprises to come out of the U.S. Labor Department report tomorrow?
Indeed, Daniela, the marketplace has been preoccupied with when the Federal Reserve will initiate its tapering of its bond buying program. Recent strong economic data, including this week, suggests that's going to come sooner, and that has spooked the commodity market. However, I think that the marketplace is factoring in to price structures the fact that this tapering is going to come, and probably sooner. So as far as surprises for Friday's jobs report, I think actually the surprise could be weakness. We saw a strong ADP jobs report on Wednesday that's geared the marketplace up for an upbeat or stronger jobs report on Friday. So the surprise could be a weaker jobs report.
Jim, two other news items we saw today. First, ECB maintaining its interest rates at a record low. And two, Japan's Prime Minister approving a $182 billion package today. Obviously, Japan's struggling to maintain growth here. Could any of these items have an impact on the metals?
Daniela, I think the takeaway from those two elements you suggested is that there is serious worry about very low inflation or even deflation in Japan and also in the European Union. I think the important thing coming out of Mario Draghi's press conference on Thursday was that he senses that there are these very low inflationary pressures are going to keep the EU's monetary policy very easy for some time to come. And with Japan, they have suffered from deflationary implications for quite some time now. They are desperately trying to inflate their economy by printing more money, and the recent episode is just more of that. So I think it's a keen worry in the marketplace that deflationary pressures could take a foothold, and if that's the case, that would throw a monkey wrench into any bullish notions regarding the raw commodity sector. Deflation is the arch enemy of most markets, including the raw commodities.
Jim, wrapping it up now with your Wyckoff market rating for the week.
Daniela, my Wyckoff's market rating for both gold and silver this week is a 2. That's fully into the bearish camp. Solid downtrends in place. We've got solid chart support for February gold at 1,200. Solid overhead resistance at 1,258 and change. For March COMEX silver, we've got solid support at the summertime low of 1,860. Overhead resistance around 2035.
All right, Jim, thanks so much for that. We'll see you next week for your special outlook for 2014. In the meantime, you can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Camboni. Thanks for watching.